Hi, this is Marie from Legacy Publishing. Today we are going to discuss Chuck's dividend income strategy. Chuck, you collected over $220,000 in cash dividends this month. Can you give us a brief overview of how your dividend strategy works?
Yes, Marie. My dividend strategy generates cash income from the sale of covered options. Many investors are not familiar with the concept of selling option premium to generate cash dividends. When you sell an option, cash is immediately credited to your brokerage account. Now, you can get paid up to a 20 to 30% cash dividend up front when the option is sold. You get to keep this cash dividend regardless of the price movement of the underlying stock. Here's an example of an option that I sold this month. This brokerage confirmation shows that I sold to open 10 of the National Oil Well 25 strike call options at 12.72 points. Selling these options resulted in $12,720 in cash being credited to my brokerage account. And again, I get to keep this cash dividend regardless of the price movement of National Oil Well stock.
Chuck, what are the risks and potential rewards of this type of cash dividend strategy?
Marie, the key to selling option premium to generate cash income is to make sure the option you sell is covered. Now, there are two ways to sell covered options. The first way is to purchase stock and selling a call option. And the second way is to purchase a call option and sell a call option with a higher strike price to create a spread. In both examples, the short option is covered by owning the stock or owning a call option. Because the short option is covered, this is a limited risk strategy.
Chuck, can you show us an example of a cash dividend trade you made this month so viewers can get an idea of how the strategy works?
Yes, Marie. Let's take a look at a trade that I took that would be an example of the first type of covered call, initiated by purchasing stock and selling a call option. This type of trade is also known as a buy right or covered call. This brokerage confirmation shows that I bought 600 shares of Morgan Stanley stock at 24.22 and sold to open 6 Morgan Stanley July 20 strike call options at 7.27. These options expire in about 4 months. Now, selling to open the 20 strike call at 7.27 resulted in a $727 cash dividend per contract being credited to my brokerage account for a total of $4,300 for 6 contracts. So purchasing the stock at 24.22 and receiving 7.27 in cash resulted in a 30% cash dividend I received up front on the day I initiated the trade. Now, I get to keep this cash dividend regardless of the price movement of Morgan Stanley stock. Now, when this option expires in 4 months, I can sell another option and collect another 30% cash dividend. If I roll over this option a second time, I would receive a total of 3 cash dividends over the course of a year. This has the potential of producing up to a 90% cash dividend over the course of a year, which could almost pay for the initial cost of the stock. Now, buying a stock at a 30% discount reduces risk considerably. The cash dividend strategy actually incurs less risk than owning a stock. The beauty of the cash dividend strategy is that it can be profitable if the underlying stock increases in price, remains flat, or decreases in price. In a future video, I will explore in detail the profit-loss potential of cash dividend trades and how to select the trades with the best profit potential.
Chuck, can you show us an example of the second type of cash dividend trade you made this month using only options?
Yes, Marie, the dividend strategy can be implemented using only options by purchasing a call option and selling a call option with a higher strike price. Because the short option is covered with the option purchase, this would be a limited risk trade. This brokerage confirmation shows that I bought 6 of the Goldman Sachs July 65 strike calls at 50.63 points and sold to open 6 of the Goldman Sachs July 95 strike calls at 27.93. These options expire in about 4 months. Now, selling the 95 strike call at 27.93 points resulted in a $2,793 cash dividend per contract being credited to my brokerage account. So purchasing the 65 strike call and selling the 95 strike call resulted in a 55% cash dividend. Now, I received this cash dividend up front when I initiated the trade, and I get to keep this 55% cash dividend regardless of the price movement of Goldman Sachs stock.
Chuck, it sounds like the cash dividend strategy is relatively low risk compared to other trading strategies, and it is perfect for current market conditions. In looking at your brokerage statements, it appears you have been active selling option premium to generate cash dividends.
Marie, the copies of my brokerage confirmations I am displaying now shows that I collected more than $221,000 in cash dividends this month from selling option premium. These brokerage confirmations list the options I sold this month to collect the cash dividends. Now, one of the advantages of the cash dividend strategy is that I can reinvest this $221,000 cash income in additional cash dividend trades, enabling me to compound my results through additional dividend trades.
Chuck, if viewers are interested in your cash dividend strategy, how can they participate?
Marie, I make cash dividend trade recommendations through my global Power Trend advisory service. There are currently 22 recommended cash dividend trades. There are both bullish and bearish dividend trades. These 22 recommended spread trades receive total cash dividends of $130,280 with an average dividend of 59%. Now, all 22 of these recommended spread trades are currently profitable, demonstrating the versatility of the cash dividend strategy during difficult market conditions. For more information on my Global Power Trend Advisory Service, log on to gpsadvisory.com or call our sales partner, Diversified Trading Strategies, toll free at 877-872-3351.
Chuck, it sounds like the cash dividend strategy is a lower risk strategy than owning stocks or options and has been producing consistent returns during difficult market conditions. Can you make a living selling option premium?
Marie, yes, it is possible to make a living selling option premium. I have been selling option premium to generate cash dividends for more than 11 years. Over the past 2 years, I have received over $4.2 million in cash dividends, selling both call and put options. Prior to that, I received over $11 million of cash dividends. When you receive up to a 30 to 40% or even a 50% cash dividend, it reduces risk considerably and can provide consistent returns during any type of market. I am displaying copies of my brokerage confirmations showing the option sales that generated the $4.2 million of cash dividends over the past 2 years.